Hey guys, and welcome to the ICT for Beginners series here on my YouTube channel. We get started today with the 2022 Mentorship Setup, aka the YouTube model, and make sure to watch the entire 2022 Mentorship Setup, the playlist from ICT. The link for that is in the description below. But now let's get started with the YouTube model. So I created this little checklist and I really try to keep it short because all we really need is bearish market structure, a cleared point of interest, could be a low of day, high of day, previous day's high, previous day's low, equal low sell side, equal high buy side, whatever. And then we need a lower time frame market structure shift or a displacement leg, this one right here, and then we enter on the pullback. So one more time. We have bearish market structure, we form lower lows and lower highs. And we keep doing that until we clear ideally a higher time frame point of interest. We clear that sell side liquidity. We have a displacement leg, lower time frame market structure shift, displacement, and we want to see a fair value gap to be left behind right here. Let me make this in a different color. And we want to enter on this pullback into the fair value gap. This is the easiest entry technique. So good extra confluences for the setup would be, what time is it right now? Are we inside the New York kill zone? Are we inside the London session kill zone? Are we just prior to the New York Open? Did the YouTube model form just before the New York Open at 9:30 a.m. New York local time? So time also plays a very critical role for the success of this YouTube model basically. And also price. Are we at a psychological or institutional level? Are we at a major double zero level, for example? I always add that into my extra confluences if I see a YouTube model. Daily range. Are we at the low of the current daily candle? So did we have, for example, a Asia consolidation, London trend to the downside, we clear that higher time frame point of interest, and then prior to the New York session, so currently if we think about power of 3, right now we're at the low of the daily candle, and this is a reversal setup. So if you want to buy low and sell high, this would also be good confluence. And yeah, just in general, higher time frame confluence. Before we go to a real chart example from Wednesday, the 23rd of August, we are going to look at different entry opportunities, how we could get in on this displacement leg. So the first one, of course, is the very simple one. We leave behind a bullish fair value gap inside this displacement leg where we break the most recent lower high of the bearish market structure, form a new higher high, and we retrace into a discount and form a higher low to continue to rally into buy side. This is really what we want to see. But we could also, for example, have a breaker block here that is paired with this bullish fair value gap. So let me use a different template. So we have a breaker block here. A breaker block, also very simple. We form a lower high, lower low, lower high, lower low, and then we break that most recent lower high with a higher high. And we pretty much all we have to do is look for the highest up closing candle of this last leg to the upside before we shifted market structure from that lower low to the lower high. We look for that highest up closing candle as support. So we could also say previous resistance that has now been turned into support, because ideally we would have liked to see resistance for price to continue lower within this bearish market structure. But right here we shifted market structure, we displaced. So now old resistance turned into support if you come from a support and resistance background. And we want to see continuation from here. That's the breaker block. And ideally we would like to see a fair value gap even paired with this breaker block. So let's do this. So if we have overlapping confluence, this is my ideal entry. You could also, for example, use a optimum trade entry where you want to see a retracement, maybe even below the 50% level or towards the 70% retracement, which would be the optimum trade entry. You could look for an order block down here to potentially hold support. And this at its core is the 2022 Mentorship Setup, or as I call it, the YouTube model. Some other YouTubers, they confuse this YouTube model, which in its core is a reversal setup, with the silver bullet continuation setup, but I will make another video about the specific differences between the two concepts in the future. And of course, this is the bullish scenario. The bearish scenario looks exactly like this, so everything just flipped on its head. Instead of a bearish market structure, we now form bullish market structure with higher highs and higher lows. We clear out buy side or a higher time frame point of interest. We have a displacement to the downside where we shift market structure, so we break the most recent higher low. We shift that, form a new lower low, pull back into breaker block, fair value gap, 50% retracement entry, optimum trade entry, order block, plenty of different ways that how this YouTube model could play out or set up to continue into sell side. So now you know all the basics about the YouTube model. Let's look at a perfect chart example. This is not cherry picked. I didn't have to go back to find a very clean YouTube model. This happened on the 23rd of August right here. So, but let's look at what happened previous to that. We opened up the daily candle right here. We bounced initially off that 4400 price level, which is a institutional level. And we kept on pumping here through Asia, went sideways for a little bit. Right here we had that midnight open. And then throughout that early stage of the London kill zone, we kept on going higher and higher. Towards the end, we started to drop, fill in a few fair value gaps, and then we really accelerated this drop outside of the London kill zone, going into the New York kill zone. New York kill zone is starting at 8 a.m. And right here we see, okay, we're relatively low, and we look for potentially our reversal setup. We're just ahead of the New York open at 9:30. So let's see, we have major sell side sitting here. We could easily bounce off that institutional level one more time. So at this point in time, I do not anticipate anything, but I'm simply aware that, okay, we could clear this higher time frame point of interest, also power of three wise, if we clear that sell side and get a reversal set up down here, a YouTube model. We could potentially see the low of the day being put in place here for a continuation to the upside. So what did we do? We are in bearish market structure. We form lower lows and lower highs, and then lower low, lower high. We clear that low of day sell side, bounce off that 4400 level, and immediately we start to reject. We start to pump up, come back one more time. Note that we also have a bullish fair value gap here paired with a volume imbalance. And eventually, during the macro between 8:50 and 9:10, we start to displace and shift market structure because we broke that most recent lower high. Lower low, lower high, lower low, higher high. Right here, we shifted market structure. So that's when we start to really look, okay, how could we get into this YouTube model? We have the perfect time for it. We just came out of the macro. We are prior before the New York Open. We have London buy side above us. We have the previous day's high buy side paired with equal highs also above us. So we bounce off a institutional / psychological level. We have a mentorship or 2022 mentorship setup or a YouTube model. It's the same. I just like to call it the YouTube model. And I start to look for my retracement entry. I saw this bullish fair value gap paired with the breaker block. The breaker block, you could pause the video and try to find the breaker block yourself. Alright, the breaker block right here. We look for the highest up closing candle between lower low and lower high before we shifted market structure. Lower low, lower high, lower low, higher high. So from this last price leg, remember from the drawing that I shared with you guys earlier, this would be our breaker block. So now we have overlapping confluence. We have our fair value gap overlapping inside of our breaker block. That is really the ideal entry in my opinion. We get in here, we place our stop loss. We don't even have to put it all the way below here, but it's still safe because we have that New York Open volatility. So it's a good practice, but this low should really be the protected low. We could even place it below that and target at least the London session buy side. Because remember, we get a reversal setup at the low of the day. This point right here has been the new low of the day. We cleared this Asian session low basically at the low of the day, so we can target, if we get a reversal setup, a opportunity to buy low, we can, least we can target would be the London high buy side right here in this example. And if you really want to continue higher, we could even target that previous day's high. Because really, we opened up down here, we had a tiny little wick on that daily candle, and we continued to expand completely to the upside. Power of three concept paired with the YouTube model, paired with fair value gap breaker blocks. This was really a awesome A+++ setup. Of course, it's a skill to actually see and spot orders live. You don't have to, you can keep it very simple. Wait for the market structure shift around a specific time inside the New York or London kill zone around specific levels. These are just good confluences, and then you enter on that first fair value gap to continue into the closest buy or sell side target. So this is the end of the video. Now you know what a 2022 mentorship setup looks like. If you have any unanswered questions, make sure to join us on Discord. I also have a section called ICT Concepts where I cover all the different topics that I use for my daily live streams as well. So yeah, definitely make sure to join us on Discord to not miss out anymore. And yeah, thanks very much for watching this video.